Hi traders, welcome to the live webinar with Admiral Markets. My name is Chris. Today we're going to be focusing on chart bag patterns, for beginners or traders that have recently started or up to I don't know a few years of trading. I think could still be interesting for you. I mean, if you have more trading experience under your belt, still may be good to stick around because perhaps you have not focused on patterns that much. Maybe you have been looking at different aspects. So, and of course, we'll be looking at the live market in any case. So, but before we do that, though, be aware of these two disclaimers. All right, the first one explains the fact that this live webinar is shown to a global audience, but may not be necessarily suitable for everyone. Therefore, please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you. Second of all, the risk disclaimer explaining the fact that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, so thank you for your attention on that one. Let me just quickly take a look at the Admiral Markets website. So as you might realize, Admiral Markets, of course, organizing this webinar, and here you have the website. There's a lot of info here, so it might be a bit overwhelming at the beginning. And I know that not everyone has the same amount of patience with websites, but this one is worth your time. Just take a few minutes here, take a few moments to look around because it's well worth your attention. There's a lot of good stuff here with regard to tools, analytics, webinars, and info about what could be traded, how to trade. So it's just generally speaking a very good starting spot when you start out trading and beyond that. All right, because of the fact that we have so many things are available here. So yeah, I definitely recommend that just to take an hour and just go through all these topics, and I'm sure that you'll discover a lot of things that you were not aware of or that could be useful for you, including these courses. I could be talking here for another half an hour, and I don't want to steal too much time, of course, of looking at the markets. But yeah, that's just an example here. For instance, two courses. So if you're just starting, for instance, Forex 101 is great because it's 9 simple lessons, 3 steps basically with 3 lessons. So that could be a very useful, quick way to get on your feet and understand what are the key things to start. All right, so that's just one of these icons. Just go to Education Forex 101. All right, so let's take a look at the live charts now. All right, this is the MT4 platform. So I'm not sure how many people are starting with trading or are joining this webinar for the first time. Maybe there are many regular viewers in this webinar at the moment, and that's great. Perhaps some of you are new, and if you are joining us for the first or for one of the first few times, feel free to use the chat. Reach out to me, ask follow-up questions, because obviously I don't know what is clear or unclear, so you have to help me on that. I already see some questions, which is great. We're looking at the meantime, by the way, at euro-dollar 1 hour chart. Okay, and let me just scroll a little bit forward. There we go. Okay, so this is not actually the fib I wanted to use. Sorry, I was actually making some screenshots. There we go for a all right, for some article. So there we go. That's actually the fib I want to use. I'll explain why in just a second. But very quickly, before we take a look at this euro dollar, the question is if I have any Elliott wave indicator, which indicates automated Elliott wave on different times. And I don't use that myself. And I've heard of it, but I'm not sure exactly what it is or how you can get it. It was a long time ago, so I personally just I track it myself. As you probably know, if you're interested in looking at my wave count, maybe you already do that, but you would like to have an indicator. I think honestly the best is to to practice it yourself, but I can imagine it does take some time, of course. So, but I'm not the right one to. I'm not sure if there's anything like that for MT4, unfortunately. But if you want to see my wave count, perhaps you already know it, but just in case, analytics wave analysis. All right. Let's see. Andrew is asking about using stochastic highs and lows to time highs and lows. Sorry. Do you use the instrument? And well, I think that these indicators like stochastics could be good for showing swings in general, but I use the awesome oscillator. Now, that doesn't necessarily mean that's the only option. That's just my choice. That's the one I like to use. Um, and but it's not the only one. I think that I can imagine the stochastics could work well, but I would not be the right one to say how to time highs and lows because I don't use that myself. So I mean, I could make a just like a general educated attempt, and we can look at that maybe later. But it's not something I use myself day in day out, if you see what I mean. So what I use is the awesome oscillator, moving averages, trend lines. The awesome oscillator is the base for identifying swings. So what is important with patterns is, basically it is all about impulse and correction. That is the fundamental starting point. From there, we can recognize chart patterns. So once we understand why price is moving with momentum, like here, right? Or perhaps correctively, like here, yeah. That's very important to recognize that. Then we can, based on that, we can understand chart patterns better. Once we understand chart patterns, momentum, and correction, then we can start to recognize wave patterns. All right, and then we can identify key spots that either invalidate or confirm those patterns. All right, so yeah, but before we go maybe too deep into these topics, let's first start with impulse and correction. So basically, if you look at this daily chart, let me quickly, there's a lot of fibs here I don't want to show. So let me just use the new, refresh this template. Hi Angel, good to see you. I'm a bit busy at this moment. I think you sent me an email. Let me check. Yes. The problem is I've been getting an avalanche of emails last 2 weeks, so I'm not able to keep up with that at the moment. But I do see it now, and we can take a look at that gold count in this live webinar. All right. So with regard to the momentum here, for instance, right? You see momentum, right? Clearly. So what is clear about it is because we see strong bullish candles. We see the majority of these candles are bullish. We see strong candle closes near the high, and these bearish candles are weaker, are not traveling that much distance to the downside. So this is typically a bullish momentum, right? Now it looks like we're in a bearish correction at this point, right? Because price is kind of moving choppily like this. It is moving down, but choppily, for the moment at least. So what does that info give to us? It indicates that this is probably a swing, this is a new swing, and this was a swing, and this was a swing. So we can understand what parts of the chart belong to each other. And I think this is where many wave pattern or wave analysts get into trouble, is because of the fact that they do not have a systematic way of identifying a swing. What is a swing, right? So if you can't see the swing or stick to the same kind of way of analyzing the swing, then you're not going to have that same consistency, the consistency you need to be confident in the way you analyze the charts. All right. So from my perspective, the main thing that I look at is not only impulse and correction, but also the awesome oscillator to identify the swings and also time factor. So, and I'm not sure, this is maybe not really topics for beginners. So forgive me if I kind of maybe dive into too difficult topics in this session. But basically, the awesome oscillator, and this is key, is the kind of key to understanding when a swing starts and ends. So, for instance, when we see this push like here, right, we see, excuse me, that this was one push because of the oscillator, that was one push. We see a correction like this, back below the zero line, that is one swing, right? We see then a push again above the zero line, that is one swing. Then we see a push back below, that is one swing, right? Then we see a push all the way up to here, this is all one swing. All right, and now we're in a new swing, which we don't know how far it will go yet. So we see one bullish, one bearish swing. All right, one bullish, one bearish swing. One bullish, one bearish swing. So we see 6 swings at this moment. 3 are bullish, 3 are bearish, and the bullish ones are obviously dominant. So at this moment, certainly so, right? 2 and 4 for sure. They have been completed, these swings. So, basically what we're seeing is that 1, 3, and 5 are bullish impulses to the upside. 2, 4, and probably 6 are bearish corrections. Now, these numbers have nothing to do with elliott waves, by the way. I'm just numbering the swings as a visual reference so you understand what I'm talking about. So we understand that the bullishness is dominant. So we could then try to analyze what this correction could mean in the context of this strong upside, what we see with the oscillator here as well. And then you can derive to certain wave patterns and wave structures. And then the next thing is like, okay, we have an idea what could happen. And then we could analyze what are key levels of confirmation and invalidation. So we can put a fib from here to here, right? From here to here, or from here to here, it's a small difference. And we can say, okay, if this is indeed a wave 3, because the momentum was so big that there's a good chance that this was wave 3, not a wave C, that this is a wave 3 pattern. So if this is a correction, this could be a wave 4 pattern. Waves 4, all right, this is kind of a guideline from a wave pattern point of view, typically go to one of these 3 fibs. In fact, probably will go to one of these 2 fibs, the 23.6 or the 38.2 fib, maybe the 50, but typically does not go below the 50. So we have levels that if price uses those levels, we could get confirmation that price turns at those levels. But we also have invalidation level, right? We know that if price goes below the 50 fib, this is not probably a wave 4. It doesn't seem very likely, all right? But the real invalidation level is if price goes below this bottom. In that case, the wave 4 is totally invalidated. So this space right in here, wave 4 is not likely. It's not the most likely scenario anymore. Whereas below here, it is invalidated. And anything above the 38, 23.6 fib, and even the 50, wave 4 is more likely, right? So that's how we could, so once we have that, all right, we have an idea about what to expect. So does this give, necessarily want to trade just based on this? I don't, but there are traders who do, and they do that well. But I must add that this is more difficult. And I think you need more experience and need to understand the charts and wave patterns, a lot better with more experience. I think if you're starting out with trading or with waves, or both, it is better to use it as a tool to understand the charts better. So it's a tool to understand what are key levels, what are key support levels or resistance levels, what area of price might be more interesting to trade, what currency or CFD or commodity could be more interesting to trade. And then use that roadmap, right, that you can read with wave patterns and chart patterns, then to look for trades that you think might be interesting and let price action confirm whether that trade happens or not. So what could be a confirmation? Well, for instance, this candlestick pattern at the 23.6 fib, right, would have given a neat trade to the upside like this. And if you trail stop the daily lows, you would have exited somewhere here. Or if you trail stop only the bullish candles, you would have exited somewhere here. In any case, profit, right? What would be the next step? Well, maybe some bullish candlestick pattern here, or even obviously at the 38/50 fib, right? Those could be confirmation trades that price is respecting these fibs. In fact, there could even be a counter trend trade available here, because we know that if price breaks through the 23.6 fib, that there's a good chance it might reach the 38.2 fib, right? If there's a good bearish candle here that is challenging or breaking through 117, there could be a breakout, a counter trend breakout trade here. Well, it depends what your definition is of trend, but there could be a trade, let me say it this way, from the 23.6 to the 38.2 fib. Also viable. And then could be looking for, those engulfing twins or whatever bullish candlestick pattern there could be visible at the 38.2 fib. So yeah, that's the translation from that analysis into trades. I think that's how I do it. I like that more because it's just, from my perspective, it's more robust and gets you kind of keeps you on the right side of the it let me say it this way, I always compare it to dancing. So by using this kind of approach, I try to trade by following what the market is showing me rather than forecasting too much and hoping that the market will follow my forecast. I use my forecast to make a plan, but I still let price do whatever it wants and try to follow that direction. Now I know that we use many concepts here, so anyone who is starting out, feel free to reach out, maybe to clarify some things here. I do see some follow-up questions right now. And let's see. Sorry for that. Krista is asking if we can take this long swing line as a third. Yes, indeed. Yes, this is most likely a third wave. And I think that is I personally see that as a high probability that this is a wave 3 because of the extended push up compared to the wave 1 and 2. Therefore, this would be very strange if this is an ABC in my view. Very likely a 1, 2, 3. Therefore, a very good chance this is a wave 4. The fact that we have a head and shoulders here, all right, we already actually broke that neckline, reached 23.6 fib. Some say, yeah, we have a head and shoulders here. And that's true if price breaks below 117. All right, and then we have space towards the 38.2 fib. So yes, we could have that head and shoulders, the second head and shoulders, but if price breaks to the neckline. And in that case, yes, there could be a correction. But just because we have a head and shoulders doesn't mean that this could not be a wave 4, because we have to consider this pattern too. The head and shoulders is only but one clue in the whole picture. We have to, in my view, or at least you don't have to, but what I do is consider other pieces of information too. And then indeed one of them is this wave 3, which seems very likely. So yes, indeed. Let's see, next comment is your education in ECS Live is really useful. That's awesome, Angel. I'm glad you started with the. I guess you started with that course. That's great to hear that. And we're gonna add to that only more so on a weekly basis. That's perfect. Andre is asking what type of oscillator is here? AO? Yes. AO differs from MACD. Well, not that much depending on which MACD I think you use. We can quickly add a MACD. Take a look at that live. Depending on exactly, of course, the settings you use. Sorry about that. I'm just not focused at this moment. Somehow I cannot find the MACD, which is, I don't know why. Has to be here somewhere. Ah, there it is. Okay, there we go. So generally speaking, not much difference to be honest. The normal MACD doesn't have any opposite colors, which is one benefit from Awesome Oscillator. But I think it really depends on which MACD you use. I know that some MACDs have that already, or then it has that MACD. I think that that you could see a little bit of these bumps a little bit better, retracement bumps sometimes. I mean, generally it's very close to each other, so there's not much difference to be honest. I just because of the color difference, I can see it bit better. But I think depending on which MACD you use, you can see that too. Actually, let's see. Thomas, I don't know that particular oscillator, right? So I'm not sure what your question is, or if you could add some info there. I'm not sure what you mean with that template. The Awesome Oscillator is part of the MT4. You have to go to Insert, Indicators, Bill Williams, Awesome Oscillator. Then there's Time Factor. Now, Time Factor is my own personal concept that I've been using for the last few years, and it's based on the fact that if there's a momentum, if there's a higher high within the next 5 to 6 candles or lower low, then momentum is continuing. So here we had maybe a more than 5 to 6 candle pause. Doesn't mean necessarily that that particular bullish momentum is over. We still get a continuation, but it does a fairly good job. In this case, we only got about 2 corrections within this entire big push that had a kind of corrective sideways zone for more than 5 6 candles and still continued higher. But generally speaking, does a pretty good job of indicating when some particular push up or down is over. And here it did again. So it's like a warning signal. Like that's a warning signal, right? And this one, indeed, we got a bigger correction. So it's kind of like the first warning, whereas the Awesome Oscillator is the confirmation in a way. The templates, uh, I don't have any particular template that I'm using here. So no, I'm not mentioning any particular template. So it must be something else. I'm not sure what you heard or what I said that referred to a template. Sorry about that. I will still think what it could be, but at this moment, not sure. I was referring mostly to the Awesome Oscillator and to my time factor pattern. This is, oh, that's an awesome oscillator. Awesome oscillator. Awesome. All right. Or AO in short that I'm using. But it is, as we've seen, quite similar to MACD. And you can find both by going to Insert in your MT4 Indicators, go to Bill Williams for the Awesome Oscillator, or AO, go to Oscillators for MACD. Regarding the stochastics, I don't know. I think Nenad would be a better one to ask which numbers are the best for that. So, but of course, with regard to chart patterns, we don't need the oscillator. We can use trend lines is the best for recognizing chart patterns because they neatly capture, in a way, what's going on with price. So here we see a bull flag. And these two trend lines is all we need really for that. All right. So is it clear, Thomas, regarding awesome oscillator? Is it all good? So, for chart patterns, impulse and correction patterns, we can use trend lines or moving averages. For wave patterns, we can use awesome oscillator, time factor patterns, and just general wave pattern rules and guidelines. And this is all to get an analysis of the chart. Then once I make the analysis, then I move to think about trade ideas and what could be an interesting trade within that zone. The screen is frozen indeed. It's not because I froze it though. It's because there's some delay, unfortunately. I saw that. I just realized that you're still seeing old screen indeed. Soon you'll see my trend lines that I'm showing, now, so that you can see the bull flag chart pattern under your dollar 4-hour chart back in August, just as an example. It will be there soon. Let's wait until you catch up a bit with regard to the screen. Sorry for that. But what MA am I using is a question. I use basically EMA closes. I use 144 EMA for long term, and I use nowadays 21 EMA for, let's say, short intermediate term. On this template, you only see 144 EMA. So 144 is for trend, 21 is for momentum, basically. So sorry, there seems to be some delay here, but anyhow, hopefully the screen will catch up soon. So yeah, those are the tools to recognize patterns that I use. Now, with regard to trend lines and chart patterns, they really provide so much information. They give us really a lot of insight into what could happen in the near future. The question really is practice. We got to really, those patterns are something that you just need to go back in the charts and just see regularly. So the more you see them, the more familiar you get with those patterns, and the better you'll get at recognizing those patterns and seeing their shapes. So and it's all about really understanding these patterns in the context. So for instance, here we see momentum, then we see a bull flag, corrective choppy bull flag. Now you finally see it. So that's already, it's simple but very valuable information that upside is more likely, right? And would be interesting for a trade, right? Then we see head and shoulders pattern, right? So that's reversal chart pattern information. And we see a rising wedge on the right shoulder, another pattern that indicates reversal. So those are all, again, very useful patterns and trend lines that we can use to identify what the structure is of the market. All right, so just two simple examples. And yeah, they give a lot of information. And then, of course, you can use these chart patterns. You can use information about trend and momentum to understand what the bigger wave patterns could be. And whether you analyze it in depth with a full wave count or you just make a general kind of view of what could be going on, that's up to you how much you use that. But just the general idea of what the market structure is doing and how these patterns interact with each other could give us a lot of info, right? The fact that this could be a wave 3 and this could be a wave 4 and this is a bull flag, gives you a good heads up that this could be a wave 5. And wave 5, typically don't have to go too far, so that you know that the breakout could be a good trade, but it doesn't have to necessarily go for that far ahead, that it could struggle around level like 120. So it's like it's like making a puzzle, and all these bits of pieces come together and you just start seeing kind of a roadmap. And you start to understand what could be interesting as a setup and what kind of space could there be available with such a setup. And the next step, of course, would be trading it. And trading is, from my point of view, then it's all about looking at candlestick patterns, candles, to look for breakouts, to look for bounces, to look for confirmations that price is indeed headed in the direction we expect. Zoom in maybe one time frame, look for a trendline break, look for a fractal break, look for some bounce on lower time frames to kind of position oneself in a trade during that breakout or before that breakout even, or after that breakout, right? Once kind of either confirmation is given. So this is kind of the next step, right? And this is something we look into with our webinars and often I refer to candles because I like to trade candlestick patterns as a way to trade my analysis. Ned likes to use pending orders, right? On Monday, yesterday, and that discusses his analysis and he has levels in mind. And he's very good at that. For me, it just doesn't work as well. Sometimes I do that, but my confidence in a particular setup needs to be way higher if I do that. I prefer candles and candlesticks and candlestick patterns, right, to give me that confirmation. It's my translation from analysis to trade setups. All right. I don't know how we didn't really plan to go that deep into this material. I hope you didn't mind, but it was a bit further than I planned to, but that's okay. So back to this $0. Basically, today's candle, very important, because if there's a bearish close like this, it would be nice if it closed below the S1, but if it did, then I think it's really a good confirmation of a bearish breakout to the downside. If it stays like this, I still think excuse me, I still think that more downside is expected, but the signal is not as great as if price would break and close below this S1. But that would still, I think, lean towards a bearish continuation if we get a candle like today. But today isn't closed yet, so we need to wait for this candle close. I'm just talking about this daily chart at the moment. If today's candle ends up with a big wick at the bottom, right, then it's indecision. And if we were to end up with a bullish candle, that's a pin bar and that's a bullish signal. So I think there could be a lot said about how today's candle looks like. Because why? Because it's approaching a decision zone. 117 is a decision zone. 117.50. So today's low at this moment is 117.35. So as I said, the bears would be better off if they really closed and broke intraday below this S1. But at the end of today, we will know, how today's candle looks like. That will give us good info, I think. Whether this is an ABC or whether this is a correction. That's what's, in my view, at stake at this spot. The upside, the target is R2 and R3. Downside, the main target is the 38.2 fib. Although, of course, these weekly pivot point targets could be places where this week price action might pause, and maybe next week we get down to or the week after we get down to the 38.2 target. On the lower time frames, there could be pin bars. ZT is saying that there could be a pin bar, and it's possible. This candle, of course, isn't closed either, so it could close any way it wants to. But if it does close like this, there's a bit of a wick. If it closes bullish, that I would consider a pin bar indeed. But still, for the moment, I personally would keep to the daily chart. I think that I wouldn't be surprised if price reacts to this S1, but it really depends how. Is it going to be a bear flag? There's a good chance of more downside. In that case, we'll see a bearish candle. Or is it going to be strong like this, and we should see some kind of wick on the daily candle? On Monday, for instance, I was talking about 118, right? So I was saying that this could still be a wave 1, 2, 3, 4, 5. But if it breaks below 118, it will probably fall down to 117.50, maybe even 117. And then this is not a wave 1, 2, 3, but probably an ABC. So it broke below 118, and indeed, this turned to be invalidated. But that's okay, nothing lost. I didn't get confirmation. I was looking for a push, flag, and continuation, which I didn't get. And in fact, we broke below it, and down it went. So now, what I'm trying to see, is this still a bigger correction like this, or is this like that? So that's why this is important at this moment. But it's not a good spot to trade, in my view, right now. Let's take a look at something else. Maybe we don't have much time left, in fact. It really went fast. Does anyone have a particular any particular instrument or currency in mind? I mean, we look at currencies, of course. Perhaps you like to look at CFDs. So I feel sometimes that we neglect CFDs. So I mean, that, of course, too, you can use chart patterns in general, and wave patterns to analyze it. I mean, you could look at Google, for instance, like this. Like that. And yeah, because at markets, you could trade not only Forex, but CFDs too, by the way. I don't mention it maybe often enough. So here, now finally, a quick view on one of them, Google, for instance, right? And you can use all of these concepts too. You see here a bearish correction. Look at that, right? With the bullish momentum prior to it. And you can use the same concepts of impulse, correction, continuation, trend lines. You're using the oscillator, right? We can identify that this was a swing, bullish swing, this was a bearish correction, and this is still an ongoing bullish swing. But within that bullish swing, there were some corrections, right? Within that swing. Maybe I should use orange so that you can see it's a different level of correction. So, and this has nothing to do necessarily with trades as yet, but this is how you can dissect and analyze the chart. Gold, yes. We'll take a look at the ones that have been mentioned, and then I guess we'll have to wrap it up. But we'll take a look at the ones that have been mentioned till now. All right, so with regard to gold, let's see, 4-hour chart. All right, so I think that this is a 5-wave down completed. Now, this is a funky little move down here. So I can imagine, Angel, that you thought this was 5 and this was an ABC. However, an ABC does not follow into the same direction as the 5-wave. So, that wouldn't work out. I mean, I can see why you think that this is a correction. I think it went a little bit too deep for this to be an ABC correction like that. Because the thing is that here it finished wave 5, and wave A needs to go up, B go down, and C go up, right? So that's an ABC after a 5-wave down. It cannot, the A cannot start here because then this is not labeled. So this part is not an easy part. I don't even remember exactly. I was analyzing it myself. I don't even remember exactly how I labeled it at this moment. I really forgot. But Angel, you will see that next week. I will have that ready for you to check it out. But I don't really remember at this point. But just generally speaking, though, I do have 5-wave up here, and I think that this could be a wave A, this could be a wave B, and this could be a wave C down. So whether this wave B is finished, sometimes we don't know. This could be still open, and we can get something like this for bigger wave B, or this could be the end of wave B. And unfortunately, some cases, this could be both equally likely, and we don't know. What we do know is that in this case, right, when price kind of turns at this spot, that whether this is an A out of a bigger ABC to complete B, or whether this is the B itself, right here, looking for a turn had some merit to it, had made sense, right? But with regard to the target, if you're looking for a secure target, then aiming for support here makes sense because of the risk that this could turn into a bigger ABC. Or move it to break even and hope that it just continues for that wave C. Or split it into parts. What could give us more info is how this particular piece, how is it moving down? What kind of info can we get there? Does it look like a 5-wave on lower time frames? That could give us more clues whether this is part of the wave C or whether this is a wave B. Because how it moves here will internally will give us info about whether this is a wave B or C, or at least give us more clues about that. So if we look at the 15-minute chart and the hourly, then I think at the moment it's more looking like an impulse. So I would at this moment I think it's probably still too unclear. This could be an ABC like this, or it could be one. It could be both at this moment. It doesn't really give us much info at this point, so it's not always a help. In this case, I don't think it really slants the odds of one way or another at this point. Um, we are at the 50 fib, I believe. Yeah, bounce at the 50 fib. So this is a bouncing spot, but it could just be a bouncing spot back to the weekly pivot point or up to here for more downside, or it could be a bigger wave C. All right, but this is, if anything, it is a potential bouncing spot. The question is, how much will it bounce? So this is just analysis, right? The trading itself, would I be interested in trading it is another question, and I probably wouldn't. But more aggressive traders might consider some bullish engulfing twins or bullish candlestick pattern here and aim at a shallow target to get a small trade here. It's not impossible, right? But whether I would be interested in that, probably not. So with regard to this part, once again, I think that this ended of wave 5 of a wave A. But this part is tricky. So I would ask you just to wait for next week. I'll show you what I have on the gold next week, beginning of next week, and you can check it out there. But yeah, this is not an easy part. Just generally, it's kind of a wacky price action. So that is a bit difficult part. All right, moving on to pound dollar, dollar CAD. So dollar CAD here. I have it quickly ready. So we were not able to break below this particular support level. We did break below this trend line, but that's it. And in fact, we saw price break above this resistance trend line, right? Break, pull back, and continue. So this is how you can use correction, trend lines, chart patterns, wave patterns. We don't have any oscillator here. One second, let me add that to make analysis. Right, and we see that about here we have the blue bars. We have 5 to 6 candles not breaking this low. So that's already a first indication that this swing could be over. And when price breaks above this trend line, that's another confirmation that this particular swing is over and a bearish swing, or in this case, this bearish swing is corrective. When we compare this, at least, to this, the bearishness is corrective. So we have bullish momentum, bearish correction. We have 5 to 6 candles not breaking this low. We have oscillator turning, and then we have the breakout, which is confirming the breakout and the end of this swing. All right, so would setups in here make sense? Yes. I think it would, right? But that's just, of course, in retrospect now. And that's always easier. But this is just to at least give you an idea of the factors that would play, in my view, a role in analyzing the dollar CAD. At this moment, right here, right now, I don't particularly see anything. Price is approaching the top, the R2. Keltner, Admiral Keltner, which is part of the MT4 Supreme Edition. So we're in uptrend. So I think probably there's nothing to trade at this point, right? Maybe on lower time frames, there is a momentum at this moment, and there could be a continuation of that to the R2. So maybe on lower time frames, an hour or 50-minute chart, if there would be some kind of here, right? Maybe some kind of pattern like this. So here, this candle on the hourly chart could have been good as a breakout. But at this point, it's just making higher highs and higher lows. So I don't think it's a good moment now. It's a bit too late. Here we saw patterns, here we saw correction patterns, but now we have higher highs and higher highs on all time frames. So I think it would be a bit too late to, let's say, chase it now, to the upside at least. Now, if you have Reversal ideas I don't think make sense at this moment because I would probably need to see some failure up in here, generally speaking, some big pin bar or something like that. For the moment, I don't think that seems very likely. It could happen eventually, but um, I don't necessarily think that is around the corner. I mean, we could take a look at the 4-hour chart and try to analyze what could be the target of the upside, right? So we could put a fib probably from here to here, somewhere like this. All right, maybe even take a little bit more conservative target like that. All right, so around 127 could be the 272 target. Price might struggle there, and that will probably be a zone that would be good for the dollar CAD to reach first before thinking about any potential exhaustion of this upside, I would say, personally. There could be double top, but I don't think there's any particular haste in keeping an eye on this. For me to, before this is confirmed double top, anyhow, it's going to be one day later before there's some kind of weakness here like that. Pound dollar. A pound dollar broke this trend line. Now, I did expect the upside to break to the upside actually, because of the fact that this was a bull flag. But I did say keep an eye on this support trend line too, because if it breaks that, then there's the potential for price to reach this support zone first. So in this case, there's a pattern, and that pattern typically breaks to the upside. A bull flag is a continuation pattern that does typically break to the upside, but not always, as you can see. Sometimes patterns fail, as they say. It's not so much that it's failed; it's just that we didn't really have a break to the upside. It just actually broke to the opposite side. That's why it is worthwhile to keep an eye on both sides of the patterns. Plus, this support trend line is useful info too. So sometimes it happens, something looks like a flag, but it could be just a choppy start. And indeed, so from this point of view, I think that one thing, just like the euro dollar, today's daily candle would be good info. If it closes with a bearish candle like this, I think more downside pressure is likely, in fact. If today has some wick at the bottom, that indicates indecision, and then we'll have to see on lower time frames how tomorrow shakes out. If there is a wick, then probably price has made this in the remaining hours. And if it makes some kind of correction like that, this could be a bull flag for more upside, in fact. Whereas if it closes today bearishly, then price has gone sideways. That looks like a bear flag and looks ready for more downside. I do think that this is a potential bouncing spot. I do think that this could be a good decision zone, and it depends how price will react to it, like this, or will it go like that. I think that will give me information about what is more likely for the next swing. But this break from here to the support zone was something that I was warning for, just like this breakout too. Euro Swissy is the last one, I believe, and the dollar itself. Let me refresh this template quickly. Use a different template. Sorry, that's the wrong one. There we go. So yeah, some wicks on the dollar at the bottom. Potential break of the highs, in fact, over the last 2 months. So it could indicate some correction. On the weekly, we can see that a bit better. And I think therefore the dollar might get into some kind of correction here. This could be the end of a bearish momentum, temporarily at least. Just have to see how this price moves to the upside. I'm expecting a corrective kind of upside. But the dollar, gaining some traction here, basically, for the moment. It's just that I think it is somewhat limited, is my outlook for this dollar upside. But time will tell, and we'll have to keep an eye on this move to the upside and keep an eye on this fib. And if this is a corrective upside, it shouldn't go further than these fibs, just like the euro dollar, but the opposite direction. So with regard to euro Swissy, last but not least, yikes, let me get rid of some of this analysis here. Let me just quickly, sorry for that. I don't look at euro Swissy on this particular profile that regularly, or in general actually. I'm not a big fan of the Swiss franc, that's why. So, but I am keeping a little bit more eye on it lately. And at this point, trying to make a quick view of multiple time frames. And it looks a little bit corrective. I mean, we're at the moment, in a way, in a channel to the upside with a very shallow angle. And this is looking a little bit choppy too, right? So this is not that clear, I think, at this moment. The whole structure is not that great. If anything, this is looking like a correction. This is momentum. But then again, this is also pretty slow. So I'm not a big fan of this particular formation. But if it breaks below this channel, on a higher time frame, there could be something to look for downside. If it does break above resistance and above the weekly pivot point, there could be some space to the upside here, like this. But I'm not a big fan at this moment. It doesn't look that neat for me to say, okay, this is an interesting formation that I would like to trade, personally. But yeah, if I had to choose, then there could be a bit of a breakout here, looking maybe for candlestick confirmation above the weekly pivot point. On the 4-hour chart, look for correction maybe on lower time frame and up to the R1. And then here's a new resistance zone, down or up. And of course the channel, down or up. All right, folks, that wraps it up for today. Tomorrow we'll be back with many more webinars. In fact, let's check that out very quickly. You can check out here admiralmarkets.com/education/webinars, and you will see real-time daily trading ideas. You will see Nanet's live webinar and mine on strategy. And Thursday, another webinar. So a lot of things to look forward to. Thanks for being here, and talk to you soon. Cheers.